Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Tuesday, the 27th of June. All right, now a little bit of rumbling here around Russia, but to me, what we're seeing is the markets reconnect after the weekend. They are stabilizing, and looks like we've found a bit of fair ground here around the various instruments, right? The dollar index now drifting sideways around 102.80. Euro also making a little bit of a comeback there, just above 109. And gold, even though it drifted down through that trend line, just stalling around 119.20. It's pretty much everything. Oil's mid-range. I'll tell you one thing of note, and the cryptos have found a bit of a home there around 30,000 or Bitcoin, but the equity markets, US equity markets, do look like they are fatiguing. And this may well be, as I was saying yesterday, NASDAQ. Keep an eye on the NASDAQ. It's been holding everything up. If we start to see stronger US numbers, we're going to see weaker equity markets. And if the NASDAQ falls significantly, I think it's massively overdone, then that's going to drag down the S&P and the Dow Jones as well, right? So that's where we are. Now, just having a look at the, say, the major currencies, all right, to start the week, as I was just saying, everything's sort of just drifting sideways at the moment, which is generally what happens, right? The data comes out, the markets move around a little bit, they find a bit of a home, and they wait for the next data release. Now, sterling managing to hang around that 127.20, just drifting sideways. Aussie's now found sort of fair value down here at 66.80, Kiwi at 61.60, and dollar CAD. This is the key for today, right? Or the Canadian dollar, right on support levels here around 131.40. We've got the CPI numbers coming out, so CAD crosses and dollar CAD are definitely in the firing line. Dollar Swiss mid-range, dollar yen, well, the carry trade just keeps charging topside. And that's what we're looking for. Now, just coming back to this, like I like to confirm various things. So looking at euro, right? If I bring the calendar over, the German IFO numbers, right? These are like good numbers, as in sort of well respected. A little bit weaker than expected. I know the conditions were slightly higher, but the expectations there as well a little bit lower. Didn't really have much of an impact on euro. If anything, very short term. So a little bit like disconcerting that it didn't. But manufacturing sales and wholesale sales out of Canada, sort of a bit of a precursor to the CPI numbers, a little bit stronger. And this is what we're talking about, right? So we've got the inflation numbers. Now, very important, obviously, we get strong inflation numbers here. And don't forget, these numbers are coming out at the same time as the US durable goods, right? There's two parts of the equation. So there's one thing you can do here, right? And we're talking about either strong or weak inflation numbers. Now, all the data has been coming out strong. We get really strong inflation numbers here out of Canada. Well, then it's puts huge amount of pressure on the Bank of Canada to raise rates again. And that's where the move is. But with this US durable goods coming out, that could be conflicting with the inflation numbers. So the easiest thing to do is focus on the crosses, okay? The CAD crosses. Leave the dollar out of it. Of course, if we get strong Canadian numbers and we get weak durable goods, well, then you're going to get a really nice move to the downside in dollar CAD. But outside of that, you can really take away a lot of the risk by focusing on the, the CAD crosses themselves. Just looking at the data there as well, if you're looking for some of the ranges. Now, New Squawk seem to be dropping the ball a little bit with some of their updates, but these are some of the numbers that we're expecting. The month on month, year on year is the sort of key to it. At this stage, and you got the core number down here as well, 3.9. So keep an eye on those numbers. As I said, durable goods coming out at the same time. That's a big number for the US as well, and we may see some activity there. Now, with the Canadian CPI numbers coming out, right, it is a bit of a head kicker of a number. You really want to tune yourself up, like focus on where the activity is, right? I'm talking about the Canadian dollar. Now, dollar CAD, it is just cruising to the downside. But all you need to do is look at your technical charts and work out where the easiest trade is or what the setup is giving you, right? We've got a resistance trend line here. So really, if we got weak Canadian numbers, well, the dollar would shoot up and we've got a nice entry here around that trend line, right? It's as simple as that. Now, you look at the Aussie dollar, right? Massively, it's getting hammered against the Canadian dollar. And that's because the fundamentals in Canada have been very strong. The Aussie RBA came out a week or so ago with their minutes and said, you know what, we were sort of we weren't sure if we were going to raise rates, and you know what, that could be it. So you see that interest rate differential trade there. This has huge potential for a move back up. I think, once again, weak Canadian numbers, Aussie CAD is probably, even though it's a tricky entry, you are going to have a nice, easy correction there to the top side. Kiwi CAD, well, same sort of setup as the Aussie, but we do have a resistance line to work with. Now, down the bottom here, Euro CAD, okay, right on a support trend line. Sterling CAD, right on a support trend line. Well, CAD Yen, you've got the carry trade in play here. I think a trade here, like a nice, easy trade, is buying CAD Yen on strong inflation numbers. Really, you're going to see a real big, strong move here to the top side in CAD Yen. If it comes off, well, you're fighting the carry trade anyway. So I don't like the downside on CAD Yen, but I do on Euro CAD and Sterling CAD, right? Right on support trend lines. It just suits the trade. If we get strong Canadian numbers, okay, these things are going to go down. There should be stop losses below those levels to give it an injection of momentum, and that's what we're looking for. So the aim is not to sort of go, you know what, I'm just going to spray orders all over the place. Work out where the easiest trades are. Now, Euro CAD has probably got a lot more liquidity than Sterling CAD, a little bit more, but they've both got good setups. CAD Yen top side, to me, is a target for sure. Dollar CAD, as I said, we've got durable goods coming out, and that could really screw up that trade if the US numbers are the same as the Canadian numbers. If they're opposite, well, then you are going to get a nice trade, but you don't know until after the fact. So work out where you want to put your risk. Now, Aussie CAD, like, to me, this could really ricochet pretty aggressively, but it has got the entry level sucks, right? Because we don't have any sort of trend lines close by. So just be aware of that. Kiwi CAD, well, Kiwi's got really tight liquidity conditions like the Swiss, right? So I always feel a little bit uncomfortable, but it does have a little bit a better setup than the Aussie. All right, so that's where we are. Okay, so at the moment, the focus is purely the CAD coming into these numbers. So there's nothing more to be doing, like messing around today, looking for opportunities. It's sort of like, well, why would you? Okay, because the bigger opportunities are going to be coming out or later today in Canada. So there's no need to be chasing trouble. If anything, just have a look at the markets and see if you can see any resemblance of structure here. Now, at the moment, US equity futures are up. Is that giving us a bit of a risk-on profile? Okay, we're talking really, you can just look at Euro, Sterling, Aussie, Kiwi, and that'll tell you, and they're mixed, right? There's mixed reaction here, so that's not in play. So just be aware, a little bit of a retracement in the US equity futures coming into the Asian session. This is where you're going to be focusing, okay? The CAD Yen, well, it's one of those ones that's just shooting up. Like all the CAD crosses, I mean, Yen crosses with the carry trade is really honking to the top side. I can't see that stopping anytime soon. That's why I like CAD Yen to the top side. If you're looking for other pairs that have really moved a lot, well, it's the Canadian dollar against the US. The rest of the pairs are moving pretty uniformly. Okay, CAD Kiwi, well, month to date, or 3 months, I should say, is 4.45. That's a little bit stretched. Aussie CAD as well. Now, the commodity currencies, Aussie, Kiwi, CAD, usually do work in tandem, but the CAD is sort of breaking away from that connection at this point. So just be aware of that, and that's where the trading opportunities can come from. So tune up your charts, go through your calendar, work out when these events are on, see if they work for you. Now, just on, before I finish up, the inflation numbers, the last bunch of numbers, Australia, UK, maybe even the US, right? These numbers, the liquidity is being pulled out of the market, right? So if you're placing pending orders in the market, it's a little bit tricky. Maybe make them a little bit wider, because all you're looking for is a number that's very or much larger than the consensus or the forecast. And that's where you can sort of get the really good trading opportunities. Okay, so year-on-year number, I don't know why they haven't got the low here, but if that's the expected high, you know, a number around 3.7 really shoots the Canadian dollar up, okay, down against the dollar and up against the crosses. And that's where the action's going to be. All right, guys, have a good one. All the best. Cheerio.